well, let us start our today's class on working capital management. Class, we are learning that factoring part. Is it not? Factoring, what is factoring? We have understood. Is it not? Various kinds of factoring we are discussing, with recourse factoring, without recourse factoring. Can you tell me what is factoring with recourse and what is without recourse factoring?
With recourse means the risk upon still on company, but without recourse, in case of without recourse factor, risk completely based on the factor.
Okay, okay. So we'll start from that. We are supposed to solve a question also. I am going for screen sharing now. Wait a minute. This is the question we are discussing, right? Before that, we had discussed what is factoring, what is with recourse factoring we are talking about. That is, those most of the factoring are generally we find with recourse factoring. That means company must buy back the invoices
Yes, sir.
in case there is any bad debt. If the factory is unable to collect money, then company will buy back those invoices which are given to the factory. That is called as with recourse. And without recourse
Yes.
means the entire
Fact,
risk of bad debt is
yes,
on the factor. Okay, so
factor.
that context you have understood. We are going to solve this question now. Please read this question.
The turnover of Zenith Limited is 100 lakh, of which 72% is on credit.
So
Debtor are
that means
allowed.
here you see sales is this much 100 lakh. So you have to find out how much of it is credit sales. Remaining portion is
Yes,
cash
sir.
sales. Right, now let's proceed.
Debtor are allowed 1 month to clear up the dues.
Okay, we know credit sale. Then we know one of the
Yes,
credit sale terms is that in 1 month debtor
yes,
has to pay. Right.
yes, sir. A factoring company is willing to advance 80% of the bill raised on credit for a fee of 1% a month plus a commission of 5% on the total amount of debt.
Now factoring company what is offering? Advance 80% of the bill. We have to find out what is the bill in fact. What is the annual sales we can find it out. What is the annual credit sales we can find it out. What is the monthly sales we can find it out. Then 80% of that monthly bill is to be offered. The factoring company is offering a finance of 80% of those bills and it will be charging a
In a,
fee of 1% plus commission
yes,
5%. Right. Now
5%.
next.
Zenith Limited, as a result of this agreement, is likely to save 48,000 annually in management cost and avoid bad debt at 1% on the credit sale.
Okay. So if Zenith company follows this thing, what will happen? It will be there will be a cost saving. Otherwise, the debtor management cost was around 48,000 annually. That cost will be saved because now responsibility is with factor. Factor will be incurring that cost, so company's cost will be saved. So that is one more advantage, and it can avoid bad debt of 1%. So bad debt is now become the responsibility of the factor. That means what kind of
Yes,
refactoring is it? With recourse or without recourse?
without recourse.
Without recourse. Good. Now next point.
The bank has come forward to make an advance equal to 80% of debt at an annual interest rate of 15%.
That is another alternative. That instead of factoring, we can go for this bank finance. The bank is ready to give us finance equal to 80% of the debts at an interest rate of 15%. And the question
Yes, sir.
is, but however, there will be a processing fee of 1%.
Yes.
The question is that would you accept factoring or offer, or
Uh,
we are going to accept the offer of the bank? Whether we'll go for bank finance or factoring? That is the question. Okay. So you have understood the question. We'll solve this question in this particular pattern. I'm showing you a particular format. First, have you noted down some of these key points of this question?
yes, sir.
Okay, now let us solve this question quickly. What is the annual credit sale? Can you tell me?
72% of total sale.
Yeah, what is that amount?
100 to 72.
72 lakh is the annual credit sale. What is the monthly credit
Yes.
sale? Can you compute
Divided
monthly
by
credit sales divided by 12? How much?
is coming 6
6
lakh.
lakh. 6 lakh. Okay. Now, what is
Yes,
80%
sir.
of this? Why 80% we are computing?
80% is given in advance.
Okay. So 80% of this is 4 lakh
Is for
80,000.
for
4 lakh
sir.
80,000 rupees. Factor will give us 80%. And factor will be charging us a fee of 0.01. So 0.01
Yes.
or 1% on this 4 lakh 80,000 comes to 4,800 we have to give as
Yes.
fee to factor. In addition to that, factor will be taking a commission. Commission is on 6 lakh rupees. Okay. And 6 lakh rupees, 5% commission, it comes to 30,000. So total cost of factoring, you can say 34,800. Did you
सर
understand?
फी तो एडवांस अमाउंट पे कैलकुलेट होता है तो फिर कमीशन कैसे
You see,
6 लाख में से
factor
पूरा
has taken the invoices of 6 lakh rupees. Commission will be given on this thing. Fees
ओके
will be
सर
computed on this. This you have to remember. Fees will be computed on the advance.
यस सर ओके सर
Right? Okay. Factoring commission, factor has accepted all the invoices.
यस सर
Right? You have understood the factoring. What happens? Factor takes all this receivable and certain percentage he gives. He gives 80%. Fee will be on 80%. Okay, but commission will be on the entire amount.
यस सर
This
ओके
you have
सर
to remember. So total cost is 34,800 plus there will be cost saving. Cost saving means management cost, 48,000 will be saved per annum. So per month cost saving is 4,000 rupees.
डिवाइडेड बाय 12
4,000 rupees. Okay.
यस सर
Plus bad debt. Okay. Now bad debt is the responsibility of the factor. So company will be saving
यस
this bad debt cost. So bad debt
यस
percentage
सर
was 1%. So this was okay. So these two are again cost saving. So the net cost will be net cost of the factoring per month will be how much?
10,000
10,000 will be saving. Is it not? 10,000 will be saving.
यस सर
So
लेस
34,800 minus 10,000,
24
24,800 will be in fact the net cost of factoring. Okay, here there is again a typographic error. This line should come down, this line should go off. Is it not? So
यस
net
सर
cost of factoring
यस
how
सर
much? This is the net cost of factoring. Net cost of factoring how much? 24,800. Is it clear?
24,800
Is it
यस सर
clear? Okay.
यस सर
Okay. So
यस
this
सर
is one option. If you go for factoring, my cost will be 24,800. Now, if you go for the bank finance, we have to calculate like this. Bank finance, we have to pay interest.
यस सर
Okay. So interest will be 6 lakh, then 80% of that, then 15%. For 1 month, how much it will be? 6,000 rupees
डिवाइडेड बाय
interest you have to pay.
यस सर
Okay. Got it?
यस सर यस सर
Now, we have to pay a processing fee for the bank finance also. That is
यस 6,000
6,000 rupees. Right. And in case of bank
यस सर
finance, bad debt possibilities are still there because bad debt
यस
is
सर
our responsibility.
यस सर
So 6,000 will be cost.
यस सर
Management cost also you have to incur in case of bank finance. It is not factoring. So 4,000 rupees per month, just like that. That means 48,000 per annum divided by 12, 4,000 rupees. So net cost per month
Yes.
is 22,000. So
1,000.
22,000 is
Yes.
bank finance, and how much was for factoring? I think 24,000 something.
24,800. Yes, sir.
Okay. So cost of bank finance is less than the cost of factoring.
Yes.
Therefore,
Yes.
company should go for bank finance.
Bank. Yes, sir.
Okay.
Yes, sir.
Is it right? Okay. Okay.
Yes,
This
sir.
question you can solve. Now we'll see some other, quickly we'll cover some other techniques of controlling working capital. These are mostly theoretical part. Very quickly I will go through these areas. Fund flow statement. So this is one more technique by preparing fund flow statement. Many companies try to monitor working capital. So this in fact shows the flow of working capital, flow of current assets and current liabilities are monitored through preparation of this fund flow statement. Just have an idea. Then one more services available, that is called as a forfeiting service. In case of forfeiting, what happens? The company sells and some other forfeiting company purchases the trade bills, promissory notes, etc. without recourse. Without recourse means the responsibility is
All
entirely
the
with the forfeiting company
yes,
which
sir.
is accepting these bills. Right? It is their responsibility. The risk of collection problems are fully with the responsibility of the purchaser or the forfeiter who accepts these bills. So in fact, they
Yes, sir.
purchases these bills. Okay, they purchases these bills without recourse. So it is entirely their responsibility. This is one more kind of service. So
Yes, sir.
some salient features of forfeiting will be quickly going through. One is most of the cases, most of the time, this forfeiting service happens in international transactions in case of export and import of transaction. The exporter sells and delivers goods to the importer on deferred payment basis. Payment will be received subsequently, but exporter sells and importer imports. Then the importer draws a promissory note or a bill the person was imported. You might have understood, you might have some idea when you have studied this bills of exchange chapter. The importer draws a promissory note or bill because importer has to pay money to the exporter, is it not? He draws a bill
Yes, sir.
or promissory note. Then the bill, what happens? The bill is guaranteed by a bank. Some banks gives a guarantee on that bill, that is bill will be honored. This process of obtaining guarantee is called as the aval. That means bill is aval. Bill is aval means some other bank has given
Guaranteed.
a guarantee on that bill, right?
Okay, sir.
Then the exporter
Yes, sir.
enters into a forfeiting agreement with the forfeiter. Exporter has to receive the money, isn't it?
Yes,
And
sir.
the exporter has what exporter is having in his hand? Exporter is having a bill of exchange or a
Bill.
promissory note. So exporter will be entering into
Yes,
an agreement with the forfeiter, right? The forfeiter may hold these notes and bills till the maturity and make payment to the exporter,
important.
right? So this is how transaction happens. There is a concept of forfeiting. Now here is one slide is there which talks about the difference between forfeiting versus export factoring. Forfeiting, as I told you, mostly it happens in international transaction, and export and import trade forfeiting is very popular. But it has got a lot of similarity between cross-border factoring. Cross-border factoring is also similar kind of thing. But there are few differences. One difference is that forfeiter discounts the entire value of the note or bill, but the factor finances maybe something around 75 to 80%, 75 to 85%. Right. And
Is cross-border factory.
cross-border factor means international factoring, but two countries are involved. Okay. You can say it's international factoring. That is called as the
Yes.
cross-border factoring or export factoring.
Yes, sir.
Right. The availing bank, which provides an unconditional or irrevocable guarantee, is critical element in case of forfeiting. In case of forfeiting, what happens? One bank offers or banks gives a kind of guarantee. That kind of concept is not there in case of factoring. Forfeiting is a purely financing arrangement, whereas factoring also includes some other administrative work like debtor management, debtor administration, collection, etc. Forfeiting is usually essentially, sorry, factoring is essentially it is a short-term financing. Forfeiting may be a continuous process. It may be spreaded over several, a long term, maybe around 5 years. Factor doesn't guard against the exchange rate fluctuation. If there will be some exchange rate fluctuation because of which amount payable increases or decreases, factoring doesn't give any guarantee or give any protection against that. Right? A forfeiter may accept that risk by charging a premium. Forfeiter may charge a premium and accept that kind of risk also. These are few differences between factoring, between forfeiting and cross-border factoring or export factoring. Got some idea?
Yes, sir.
Okay. Now ratio
So,
analysis. Yeah, you're asking something. Please ask.
I'm asking forfeiting is better.
Forfeiting is better or factoring is better? Is it your question? Is it your question? Rosalie, you are asking the question, no? Okay, your voice is not clear, but I understood which is better. It depends upon the circumstances. Okay. So in a particular situation, forfeiting might be better. In some other situation, factoring might be better. It depends how much is the cost of forfeiting, how what is the cost of the factoring. You have to compare both the things. Okay.
Okay, sir.
Okay. So on that basis, you
Yes,
have to
sir.
decide which one is better. Then
Yes,
this is
sir.
one more tool. Ratio analysis is one more tool which is also helpful in working capital management. Here we calculate various kinds of ratios, and through those ratios, companies monitor working capital management. So some of the ratios you might be knowing: current ratio, that is current asset by current liabilities. So current asset,
Yes, sir.
these are the important components of working capital. By monitoring these
Yes, sir.
ratios, company manages working capital. One more ratio is called as acid test ratio, where current assets are reduced by inventories because inventories
Inventory.
are not readily sellable or not quickly sellable. So therefore, these are reduced, and so we can say quick asset divided by current liabilities. Then inventory turnover, cost of goods sold divided by average inventory head. Like this, these ratios are calculated. Few other ratios are like this: current assets turnover ratio, receivable turnover ratio, debt equity ratio. These ratio computations also helps in monitoring working capital management.
Yes, sir.
Okay. Few more ratios like quantum of shareholders fund invested in current assets. This is also one more asset, one more ratio. That how much of shareholders fund is a long-term fund. How much of that we are investing in current asset and how much of
Yes.
it we are investing in non-current assets. The quantum of shareholders fund and long-term funds, both the thing. Shareholders funds as well as long-term borrowed fund invested in current assets. That is one more analysis.
Yes.
The relationship between shareholders and long-term funds on one hand and short-term funds on the other hand. So these kind of comparisons are also helpful in managing working capital. Few innovations have come in receivable management specifically. One is centralization. Many companies do their centralized billing, centralized data management, centralized banking. So these also helps better working capital management. Alternative payment strategies, several kind of strategies are there. Theoretical aspects are like this includes, let us say, online payment, customer oriented receivable management, risk evaluation, to whom, what kind of customers we should give credit to, we should make sales on credit. So evaluating that risk. So like this, these are some list of innovations which have come off in the field of receivable management. You can go through this slide. E-commerce, account
Yes.
receivable system. Through this, through all these innovations, it has become easier to manage receivables. Any doubt you have in any
Yes,
of
sir.
these items? Otherwise, you can go through it later on.
No, sir.
Theoretical areas. Some of these explanations you can get it from your study material. You can understand. Okay. Now
Yes, sir.
coming to monitoring the receivable aspects. So when you talk about the monitoring, these are the several computations we make. One is computation of average age of receivables. compute on an average basis our debtors are outstanding for how many days. It is 60 days, 30 days. So that average age calculation. Aging schedule. How much of debtors are more than 30 days old? How many of debtors are more than 6 months old? These calculations also help. Then certain collections programs are also followed for monitoring the receivables. Right. So receivables are monitored through all these programs. Now coming to management of payables, that is also one more aspect of working capital management. Okay, the payable very quickly and at a very surface level we'll be understanding this thing. Yes, it is not there in your syllabus in your study material, but still we'll cover it to have a complete idea. So
Okay, sir.
coming to management of payables, it deals with two kinds of costs. First of all, cost of availing credit and cost of not availing credit. When you want to buy something on credit, there is a cost, is it not?
Yes, sir.
Price, loss of
Yes,
some
sir.
goodwill, etc. And if you're not availing credit, still you have got a cost. Okay, we'll be seeing that. We'll be seeing how to compute this cost of availing credit and cost of not availing credit so that a finance manager can take a decision that in which situation one should avail credit and one which situation one should not avail credit. Okay,
Yes, sir.
right. So managing
Yes,
payables
sir.
involves these things. We have to learn who authorizes the purchases of the company, whether the purchase quantities are geared to demand according to the demand, whether things are purchased or not, whether order quantities are decided like EOQ etc. are followed or not. Do you know the cost of company as regards to carrying cost? So whether you know the carrying cost, whether the company has thought of some alternative sources of supply, whether suppliers have return policy, the company doesn't want whether our inventory or whatever we are purchasing, whether that can be returned or not, whether the company is a position to pass on the cost increases. If for some reason cost increases, whether it will be passed on to the supplier, whether the company can charge back the cost of delays, or is it possible to get the things just on time basis. So these are some considerations which are to be kept in mind while
Definitely.
managing the payables.
Yes, sir.
Right. So here coming
Yes,
to
sir.
payable management, here is one formula which deals with computation of NPV of the basis
Net
credit
present
granting
value.
decision. So this is about suppose you want to grant credit, then you need to know what is the net present value of that decision. This formula helps
Okay,
us to
sir.
compute the net present value of the credit granting decision. This formula you see P stands for probability, R stands for sales, right? Okay, so
Yes.
sales into probability meaning we will be getting probable sales. Then we'll discount it with this formula 1 plus R to the power T. That means at the required rate of return it is
Yes.
discounted so that we arrive at the present value of expected sales. This part is the present value of expected
Yes, sir.
sales. Minus,
Yes, sir.
minus we find
See.
what is the cost of investment on sales. Okay, C is the firm's investment on sales. So this is the impact I am finding out. What is this? Is the benefit? This is the cost, right? The present value of that thing we compute.
Yes,
Then on that basis, we give present value is positive. We may say this credit granting decision is okay. Benefit is more than
yes, sir.
cost. Benefit will be receiving in future. So therefore, they are discounted to arrive at the present value. Okay, so this is one formula which is used to compute NPV of the credit granting
Great.
decision. Similarly, one more formula is also used. That is, this formula is used to compute the cost of not taking discount. If you are not availing discount, what is the cost? By using this formula, you can compute 100 divided by 100 minus D. D stands for size of discount. Okay, to the power
Yes, sir.
365 by T. T is the reduction in payment
Yes,
date.
sir.
We'll be seeing it with the help of some example. Minus 1. This formula is used. There is a shortcut formula also. Shortcut formula is D by 100 minus T into 365 days divided by T. We'll be solving a question by using this formula. It will help us to understand how to
Yes.
compute the cost of not taking a discount. Okay. Now, in that context, we need to understand few terms, some of the question. And you had earlier asked me a doubt about the question. I told you after this management of payables, I will be
Yes, sir.
explaining you what is this. What is the meaning of this? 2 by 10 net 30, 2 by, let us say 2 by 20 net 45, 2 by 5 net 60. Many times these are the certain terms which are used uh, in businesses, right? When I say 2 by,
Yes.
let us say this question, it says indication of something like this 2 by 10 net 30. Okay, what does it mean? That when I say 2 by 10 net 30 means if you pay the bill in 10 days, then you'll be getting 2% discount. Understood? Otherwise, you have to
Yes,
pay
sir.
it within 30 days. So normal credit period is how much? 30 days. But if you pay in 10 days, then you'll be getting 2% discount.
Two.
That is what it is actually 2 by 10 net 30. Suppose I will say 2 by 15
Yes.
net 60. Can you tell me what is the meaning of this?
Within 15 days, if we are paying within 15 days, then we will get 6% of discount.
2% discount.
And that period is of 50% discount, yes, sir.
Okay.
And maximum of two you can pay within 60 days.
Okay. So that is what you need to understand. Sometimes it is expressed like this 2 by 15, comma N 30. That means 2% discount if you are paying in 15 days. And N 30 means no
Yes, sir.
discount if you are paying in 30 days. Okay.
No discount.
No discount, zero discount you are paying.
Yes.
Or sometimes it is expressed like this
Yes.
N by 10 EOM. That means the invoice is payable within 10 days after the end of the month. EOM means end of the month. Okay, suppose I'm raising invoices on January 15th. So it is payable by February 10th. Month end, then 10th.
Yes, sir.
Okay, so these
Yes, sir.
terms we have to familiarize ourselves with this kind of terms so that you can understand the question. And this is the question which you have asked me. That 2 by 10 net 60,
Yes, sir.
what is actually this is indicating? This is a snapshot you have sent me through WhatsApp.
Yes,
Okay,
sir.
so we'll solve this question now. Okay, this
Yes,
is a
sir.
question. Can you read this question? Very good question.
Find out the average size of receivable if the goods are sold for 10 lakh on a net 60 credit term with an assumption that 20% of the customer do not pay within the prescribed time. Will there be any change in the average size if the term of credit changes to 2 by 10 60 assumption that 60% of the customer avail discount?
So it says the average size of receivables. Find out the average size of receivables if the company goods are sold for rupees 10 lakh on a net 60 credit terms with an assumption that 20% of the customers do not pay in the prescribed time. That means 80% will pay in the prescribed time, 20% will not pay in the prescribed time. Prescribed time is 60 days. Will there be any change in the average
Yes,
size
sir.
of the average size if the terms of credit changes 2 by 10 net 60? That means if you pay in 10 days, we will give you 2% discount. Otherwise, you have to pay in 60 days. With the assumption that
Yes, sir.
60% of the customer will avail discount. That means 60% of the customers will be paying within 10 days.
Yes, sir.
Okay, first case we will see what is the average collection period. Normal collection is what? 60 days. Okay,
Yes, sir.
okay. Normal
Yes,
credit
sir.
term is 60 days with an assumption that 20% of the customer do not pay.
Yes, sir.
Okay,
सर ये 60% में पेमेंट हो रहा है उसमें डिस्काउंट नहीं है.
60% of the customers avail discount. 60% avail discount करते हैं ना, बाकी 40% के लिए नहीं
Yes,
मिलेगा discount. Now we are calculating
no sir.
average collection period. Try to understand. Average collection period is 60 days, but since some of the
Yes,
customers are not paying within these 60 days, so our average collection period is increasing. How many people are not paying?
20%.
20%. So 60 is a collection period.
Yes,
But
sir.
again, it will be increased by 20% of the 60 because some people are not availing. So 72 days.
Yes, sir.
And average size of receivables is, our annual size is how much? 10 lakh
10.
divided by 360 into 72 days. So 2 lakh is the, your question was, I think,
Average size of.
where from this 20% has come? 20% has come from here.
Yes, sir.
Okay, 20% of the customers do not pay. So normal credit period is 60. Question is asking what is the average credit period you have to calculate. 60 plus it will be increased by this amount, 72 days. Okay,
Yes, sir.
now understood this average size of receivable. Yeah, should I repeat?
Sir, one question is if we are paying within 10 days, then we will
Your
2%
voice is
discount.
your
If
voice
we are
is not,
paying in 60 days,
no, your voice is not clear. Can you please speak again?
सर मैं पूछ रही हूँ कि अगर 10 दिन में दें तो 2% डिस्काउंट मिलता है तो वो जो 60 डे में
Okay. Second part you are saying
डिस्काउंट
10
क्या
दिन में discount देते हैं. Okay, एक minute. Let us go to case 2. Case 2, then we will come to the question. Second case, what happens? We are changing the our sales policy. We are saying we'll be giving 2% discount if the customer pays in 10 days. Otherwise, net collection period is 60 days.
yes sir
So average collection period is how much?
60
We are
days
saying 60% of the people are availing this.
yes sir
Okay, so average collection period is that 10 days, but 10 days only 60% of the customer will avail it. So zero point 0.6
yes
into
sir
10. Remaining 40% will not avail. So for remaining
yes
40%,
sir
0.4 is, now this portion you see 60 plus 0.2 into 60. ये जो portion है, this portion is same here. Okay, that means our normal thing, 40% people will go by the old scheme. Old scheme you have already computed 72 days. So 0.4 into 72
yes
days
sir
plus 0.6, only 60% people have 10 days. So totally it comes to 35 days. And average size of receivable is 10 lakh divided by 360
divide
into 35, it comes to 97.22. So if you go for new scheme, our average receivable at any point of time, this much will be outstanding, 9722. If you go for old scheme, then at any point of time, 2 lakh will be outstanding. So this much amount is
yes
blocked
sir
here, this much amount is blocked here. So you have to compute the cost. So naturally, case 2 is better here.
yes sir
Is it not? Understood the question?
yes sir
Okay. Why we are taking it?
yes
Normal
sir
collection period is 60, but since 60% of the people or 20% people are not paying in time, so it is increased. So zero point 0.2 into 60, 72 days. This is for 20%. Now under new scheme, what happens? 60 people will pay, 60% of the people will 10 days. So zero point 0.6 into 10 plus zero point 0.4 into old scheme. 0.4 into 70 days. Did you understand this question?
yes sir
Okay, fine. Similar,
yes
one
sir
more question is that I am leaving this question for you. You can try at home. A company has been offered credit terms of its supplier of 2 by 10 net 45. It can invest any additional cash for additional 35 days at an annual return of 25%. Bill amount is 10,000 rupees. Decide whether
yes sir
company should avail credit or
credit
not,
and
whether it will go for credit or not. How to solve the question? You
yes
can
sir
go through this question. Right, later on, you see, company has a choice of paying 98 per 100 in 10 days because 2 by 10 net, uh, net
yes 2% discount
what is it says 2 by 10 net 45, right? So
yes sir
company is paying, if he pays in 10 days, you'll get 98 for rupees 100 in 10 days or pay 100 per 100 in 45 days. we'll be calculating what
Yes,
is
sir.
the cost of not availing credit. I had shown you that formula. Cost of not availing the credit is, this is the formula, 100 divided by 100 minus 2. 2 is the number
Plus
of days,
discount.
divided by 360, no, to the power
Discount.
365, 35 minus 1, it comes to 23.5 annually. If company doesn't
Sir,
maintain, yeah,
where from that 35 35 कहाँ से आया?
35 is the additional
You
days,
did.
45 days minus 10 days.
Oh, okay, sir. Okay, sir.
Okay, not, it's the additional days company is taking.
Yes, sir.
Okay, a company does not pay in 10 days, the same 9,800 rupees can be invested further for a period of 35 days at 25% interest. That is what opportunity cost.
Yes.
The cost of refusal of discount is calculated like this: 9,800 into 25%. For the remaining 35 days, it comes to, if you're refusing the credit, the cost will be 235. The net cost of discount will
Yes,
be
sir.
therefore 10,000 minus 235, 9,765. Net cost with the discount is 9,800.
Yes, sir.
Right? Without discount is
800.
9,750. So it is better to refuse discount.
9.
I will request you to
Yes,
go through
sir.
these questions and solution again. I am not discussing it in detail.
Yes, sir.
Okay, go through it, try to understand it. This is one more important question. Next question, you had asked a particular question
Yes,
that
yes, sir.
how you are computing that gas expenses in the question of 30, question number 13 of 30 of ICSI study.
Yes, sir.
Right? The cash expenses you see in the working capital is given working capital for cash expenses for 1 month. And if you see, these expenses are in fact cash expenses, except raw material which are important, raw material local for which credits are available. All these are the cash expenses, excluding this depreciation. Depreciation, plant depreciation, building. If you ignore, the total comes to 4,48,000
Mm.
for the entire year. So the cash expenses will be 4,48,000 divided by 12. It comes to 37,334. So your question was how it is computed. It is computed like this. Is it clear?
सर अगर यहाँ पे कैश एक्सपेंसेस है तो उससे पहले पैकेजिंग ड्रम भी अलग से लिया हुआ है पैकेजिंग ड्रम
Yeah. You see what we are computing here.
अगर
Total capital needed. Land is this much. Building is this much. Plant and machinery is this much. Okay. Okay.
यस सर
Investment in working capital.
यस सर
Right. Imported raw material, this much is needed. Imported, sorry, local raw material, this much money is needed. Packing, this much money is needed. This, all these things are needed. Plus, you have to maintain debtors, this one. You have to maintain finished goods. In addition to that, you have to give cash. Now, to compute cash, you have to give a certain percentage of working capital for cash. And here the question says cash will be 1 month. Cash requirement will be, the question says, for 1 month of the cash expenditure. And this is the total annual expenditure. So 1 month's cash I have to keep, so divided by 12. So here what you are asking that I am including all these expenditures here, like
दो
let us
बार
say,
यहाँ पे
no, you see, this is the working capital requirement.
दो बार
No, it's not two times. It is, you see, we are calculating here cash expenses, how much cash is required. And to calculate this thing, we are using this thing. We are using, let us say, all these expenditures, including packing cost, etc., as a basis. On that basis, we are computing cash expenditure. Don't think that it is included here and again it is included here. It is not so. We need this much of stock for packing. For packing drum, this much of stock has to be kept. But in addition to that, we have to keep cash, and the cash requirement is computed on that basis. Is it clear to you?
यस सर
Now, here one more question you had asked. Working capital here is 7,45,000, and Subsequently, it has taken, I think, 7
Yes,
lakh
sir.
97,000. Try to understand
Yes,
here
sir.
what the question says. Question has add one more thing. It is saying, okay, it has been assumed no credit is available in respect of imported raw material. So if imported raw material credit is not available, you'll go back. Here you see when you're calculating working capital, we have calculated here. This is the current asset minus current liabilities means creditors are deducted. We are getting 7,45,000. And when deducting current asset, we are
Yes, sir.
calculating import.
Yes, sir.
Import this much, local this much. Now let us say credit is not available on import. Then how much to be deducted?
Yes.
Only 6
Only
lakh
the
26,000 divided by 12. So here instead of 1,06,033, it should be 52,166.
yes, sir.
Now ultimately we will be getting, if you deduct these things, we will be getting 7 lakh 99. So what I feel, it should be 7 lakh 99. It has taken 7 lakh 97, which may be a typographical error, which I feel. You check, there will be some other error, but I feel this is a typographical error. It is not 7.97, it should be 7.99. Okay, understood. That you
Yes, sir.
please check if there is some other error or it's a typographical error. But you have to compute it like this. If no credit is available in respect of imported raw material, how to do it? Is it
Yes, sir.
clear? Okay, coming to
Yes, sir.
last few things about financing of working capital. So various sources are there. Some sources are called as spontaneous sources like trade credit, or you'll be purchasing some things in credit. So trade credits, bills payable, accrued expenses. So these are some spontaneous sources. Suppose you have to pay salary to the staff. It's not that every day you are making payment. Once in a month you have to make payment. So expenditure will be accruing. So automatically you are getting some credit facility. Bills payable,
Yes, sir.
your suppliers will be giving you bills and you will be paying in time. So these are some credit facilities will be spontaneously available to you. But some negotiated sources you
Yes,
have to try and avail these sources like intercorporate loans, commercial papers, funds generated from operation, public deposits, bill discounting, factoring, forfeiting. All these things are the negotiated sources through which you will be able to finance your work. Plus bank sources, cash credit, overdraft, bill discounting, bills acceptance. Okay, letter of credit, bank guarantee, these are some more sources of financing. Okay, are you getting?
yes, sir.
So with
Yes, sir.
this, we are going to close this chapter, working capital management. Okay, right? You have
Yes, sir.
any other query?
No, sir. No, sir.
Okay, then thank you very much. We'll catch up with next
Thank you,
chapter.
sir.
I think portfolio management, or what is that? Portfolio management or security analysis?
Security analysis.
Security analysis will catch up. Okay, thanks a lot. Thank you very much.
Thank you, sir.